What's up, guys? I am going live because I did have someone comment that they wanted my strategy explained. So I'm going to give a little overview about it. Not sure if you watched my my lives, but let's give him a little explanation. All right. So I'm coming into the market, right? What do I do? Right. My strategy is completely simple. What I'm doing is I'm trading volume, right? Volume is always going to be your best friend. Volume is what moves the markets, right? How many orders we're getting and at what rate, and if it's going to be a catalyst in the market or not, right? If there's no volume in the market's not going to move. So volume is always going to be your best friend, right? First thing I do in the market is I analyze my VWAPs, right? Before market opens, I look at what overnight VWAP is doing, right? In this case, we were over overnight VWAP, and then we were under, right? Explains the shorts today, right? So the first thing you do is you mark out the first 15-minute open of the range, right? Market opens 8:30, whenever um, whenever you're coming into the market, right? If you're at Eastern, it's 9:30. Central's 8:30, so on and so on. So let's do it, right? So you mark out the first 15 minutes. My number one rule is you never trade before the 15-minute open, right? I know this looks very enticing to take, but trust me, it's never worth it, right? I mark it out and I wait because I need to see some structure going into the market, right? Overall market structure does matter, but is not as important as you think. When you're talking about overall market structure, right? It's just higher highs, higher lows. You don't look at changes of character. You don't look at swing highs, swing lows. None of that bullshit, right? It's just is it higher high, higher low, right? It just comes as structure, right? In this case, higher high, higher low, higher high, higher low, whatever it may be, right? Changes of character do not matter, right? Because this would be considered a change of character, but we'd see a consolidation for another half hour. So that doesn't matter to me. What matters to me is just basic structure, right? You're looking at basic structure if we're going up, if we're going down, right? That's all there is to it. All right. In this case, market does open and it opens underneath, right? Underneath opening range. And we had a strong break, right? Strong breaks of opening range are typically considered as just down moving markets, right? If we see a strong break of opening range, right? This rejection does not count because it was just a news spike, right? But typically when you see a strong rejection of opening range, you're going to be wanting to go short, especially if we're rejecting VWAPs, right? So the two VWAPs that I use, well, technically three, but I didn't have it on, right, is current New York VWAP, overnight VWAP, and then previous day's New York VWAP, right? I can set it on if you'd like. This was Monday. Man, Monday was some bullshit, man. I ain't gonna lie to you. Alright, set up yesterday's. And you can see we almost came back down into it, right? There was orders sitting at 6,900. That explains it, right? So those are the three VWAPs you're looking at, right? New York VWAP is mainly where buyers and sellers unload their share, right? People who come into the market, right? They see New York VWAP, and then typically big banks or big investors or big traders, right? They'll unload their shares at New York VWAP because that'd be the average weighted volume price, right? If you want to unload where you want to go, you come into New York, and then you can unload your shares there because that's where majority of the shares are unloaded, right? The next thing you do is you look at your price targets, right? Which is, high of day, low of day. You can look at session highs and lows as well as Asia and London, but I don't think they're typically as important, right? You look at high of day, low of day, right? And then you're gonna look at previous day's high, uh, previous day's low, and then week high, week low, right? I have that on my my trading view chart, right? When I'm looking at it, it's already marked out. If you're using trading view, it's called Asian Session Range FXN, and you can set up all your indicators on there, right? So you can go to settings, and then you set up whatever time zone you're in, and then you have London, Asia, and then you have the most important, right? Show previous day's range, and you're gonna show you're gonna see last week's highs, this week's highs, yesterday's highs, all that kind of good stuff, right? You typically have that included, right? And then you see this all marked out, and then you see yesterday's highs right here, week highs up here, right? We are at all-time highs, so that explains it. All right, and then my strategy pretty much concludes of what we're doing off VWAPs, right? Without using Bookmap, I'm just looking at what the VWAPs are doing. Are we coming into New York VWAP? Are we rejecting off New York VWAP? Are we accumulating shares off New York VWAP, right? And then let me see where we are in just the overall range of the regular overnight VWAP. So that's just the start, right? 5 p.m. yesterday, that's when it starts. That's where it should be on your candle. They typically have it in just the regular indicators. It's just VWAP, VWAP, volume weighted average price, right? So we're going to see, right? This is the first thing I do into the market every single day. Where is New York VWAP? And then where is overnight VWAP, right? In this case, my first shorts I took over here, right? Strong rejection off opening range low, right? Because it was a rejection off New York, heavy rejections off New York, and heavy rejections off overnight, right? And then I saw liquidity in the bottom, which I'll get to in a second, right? In this case, I see this big rejection, and I see that we're not even accumulating shares. We're not even we're not putting in shares. We're not bouncing around it, right? We're not consolidating, right? So it doesn't mean that means price knows where it wants to go, and it wants to go down, right? In this case, it went down, 7-8 points on ES, right? On NQ, you would see maybe like a 40-50 point drop if we're talking about an equivalent, right? So that's where I would take my first short, right? This range was set. We're accumulating downward really fast. I want to catch a little bit of the move. That's perfectly fine, but that's not the greatest setup, right? What you want to do is you want to be patient, right? You want to be patient, wait for structure to set, right? Random news spike came in. We started accumulating upward, right? And now what we see is we're bouncing around New York and overnight, right? New York and overnight, or we're bouncing around, but we're not rejecting it, right? We're not rejecting to go upward. We're not accumulating upward. We're around this range and we're consolidating, right? So that means price doesn't know where it wants to go, right? And that's when you use Bookmap. So let me explain it with Bookmap now. Right? So there's few key things about Bookmap, right? Bookmap should be, for number one, if you're just using basic Bookmap, it should be where liquidity lies, right? Liquidity lies in certain regions, right? So that means price is more likely to go into that region, right? So the reason I was thinking shorts, because we were rejecting overnight in New York, right? Because we weren't accumulating strongly above it. We didn't, go to our next target, which would have been opening range, right? You identify what your target is, right? So in this case, we saw a drop, big drop, random news spike, right? And accumulating upwards up to New York and overnight. What do I want to do at New York and overnight? I want to wait to see where price is more likely to go, right? To the downside or to the upside. In this case, we saw more sellers in the market than buyers, and then we ended up going to our target at near 6902 and 6900, which, as you can see, is extremely highlighted. So that means there are buyers waiting to be there, right? Sellers are going to take the market down and then either take profits right here, or let buyers come in and buy this all out, right? if you want the advanced version of Bookmap, right, you're going to look at these. You're going to get these, which is pace of tape imbalance. So the imbalance of the speed at which orders are coming in, right? If you want to see sellers come in, you want to see this pick up, right? And then I have price change. So how fast is price moving to the upside or downside? This means we're really moving to the downside. As you can see here, we're pushing down, right? I have aggressive sellers and aggressive buyers. So this is just volume pressure. Where's the pressure coming from? Is it from the buyers or is it from the sellers? And then I have my icebergs, right? Icebergs is another thing. If you want the advanced version of Bookmap, you also want icebergs, right? Icebergs are hidden orders into the market, right? Because big banks and institutions, they're not going to put a 10,000 limit order onto the market, because what would price do is going to come in, sweep it immediately, and take them out of the market, right? Because they don't want to make themselves obvious. If you're a trader, you don't want to make yourself as obvious as possible. What you want to do is you want to be in secret, right? So this is just a fraction of big shares, right? Iceberg is 10% of the total amount of contracts that are in that price range, right? In this case, a big accumulation, 1,000 icebergs in reality is 10,000 contracts, right? 10,000 contracts, that means it's a big liquidity level, right? And that means sellers want to go down, right? The more sellers you see, right, the more icebergs you see, typically will show you which range we're coming into. It doesn't mean that's the case all the time, because these icebergs can be used as liquidity as well, right? When you're coming into here, you see a little, some buy icebergs get hit. Some of that is all liquidity, right? Liquidity to the downside, they absorb those orders and they accumulate downward, right? In this case, you see buildup of sell icebergs, which is way more than the buy icebergs, right? Which leads to seller aggression, right? Towards a liquidity level to the downside, right? So that's how I took my setup today. My setup, right? Rejection off New York and overnight. My stop was placed right here, almost got stopped out, very close, right? This is my previous structure. So my stops are always behind the next previous structure, right? If I were to take longs and say right about here, right, after market came down and started accumulating upwards, my stop would be at low of day, right? Because that's the previous structure. And if I'm taking shorts, if it's coming into here, that would be my previous structure, right? If I entered into here, right here, after this rejection off New York, my stop would be right there. And then I would target the next previous structure or the next liquidity zone or the next key level, right? The stronger the point of interest that you're looking for, right? That's when you want liquidity and you want a key price level, which is opening range, high of day, low of day, previous New York VWAP, right? Price almost came into previous New York VWAP because there was a lot of liquidity there, right? So it makes it a valid price point. You want things to be valid, right? So that means you want liquidity there. If you see a price point like high of day, right? You're like, oh, I think we're coming up to high of day. Are there orders at high of day? There isn't. Then we're probably not coming up to high of day, right? We're coming down to whatever has the most amount of liquidity, either to the upside or downside, right? And then you determine, how fast or at, or what time we're coming into that by just looking at either overall volume, how fast orders are coming into the market, or rejections off New York and overnight into price ranges, right? That's what you're going to be looking at. You can, and this is a repeat. This kind of setup happens all the time. Any day you look at, you can find those kinds of. Hold on. You can find these setups anywhere, right? You can talk about yesterday, right? I could tell you exactly what happened yesterday, right? There were some orders right here, right? We broke out of opening range. We swept opening range, right? You can also sweep opening range if you didn't know. This is 8:30, right? This is that, right? Okay, we swept high of day for sure, right? This would be considered high of day, right? High of day and opening range. You're coming into the market sees this liquidity, takes this liquidity, right? What is going to be your next target, right? Well, maybe there's liquidity to the upside right here, or maybe liquidity right here, right? That you want to absorb. Does that mean it's going to hit it right away? No, right? You're going to see, oh, wait. Okay, well, I see what's chopping. And we did reject, New York and overnight once, and we're coming back down, right? I see pockets of liquidity here, pockets of liquidity here, right at overnight, and then a little bit more right here, right? So what would be the best option, right? Well, we already broke out of opening range, and then we're really consolidating. I'm seeing a lot of buy icebergs right here, and we're collecting liquidity right here, right under overnight. What do I want to do next? I probably want to go long, right? So I see that final push upwards, right? What would be my target? Maybe a 1-to-1 to overnight, sure. Or not overnight, to opening range high, sure, right? Or maybe you want to target that previous structure, which is perfectly fine, right? Maybe take some profits right here, right? Price starts accumulating downward. Okay, I'm going to hold it, see if price starts going up again, and then we go up and then we hit your final target, right? You can maybe add in orders right here. That's typically just based off, whatever you're most comfortable with, right? If I were to enter off this touch of overnight, coming to here, I would take profits right here, right? I'm not going to stay in my whole entire position. Right? Price starts accumulating downwards, and I see we're bouncing around between New York and overnight, but I see accumulations of icebergs down here, and we're absorbing liquidity, right? I want to be adding in contracts. I want to be in longs, right? And then we eventually do hit our price target, right? But how many times has that happened? This happened once right here, or you could take full profits at or partial profits at opening range high or previous high of day, right? And then you could take another setup right here, same stop, and finally hit full TP on that, right? Take profits again, right? Multiple setups throughout the day. Go over another example. CPI day. Interesting. All right. Okay, so what do we see here, right? In this case, right, since we don't see a strong break above opening range high, so probably collected some liquidity to the top side, right? But I remember this day. There was tons of liquidity at overnight. Tons of liquidity, right? So you're coming into this liquidity right here, right? And you see this rejection right here of New York. Do you want to be long, right? I see, okay, we're coming into this price range, but coming down, and we really swept New York. We haven't hit overnight yet, and we start accumulating again. And I see we're coming into these orders, but I don't really see orders to the top side forming yet. Do you want to be long or short, right? Maybe in this position, you want to be short. You're coming into here, right? Creating a lower high, stop at previous high, and then maybe target right here. Or if you want, you could target overnight, right? Catch 13 points. And then you see this clean bounce off overnight. We're not holding overnight. We just completely bounce off of it. We hit our liquidity levels at overnight, right? We don't want to go higher. Then you can start targeting highs again, right? Come into here, you see this really accumulating. You see this break of New York, right? Stop at previous low, and then boom, right? Target either that right there. Maybe there's some liquidity levels right here, right? I don't remember specifically, right? Boom. All right. You target, you get that clean entry. You can get another clean entry right here, right? And then after that, there really isn't anything, right? But there's multiple entries. You just have to be patient, right? Two separate entries. Maybe you took this short right here. I took this short on NQ right here, right? It was the same kind of setup. retracement to some kind of liquidity, but extreme liquidity to the downside. Buyers were overbought, right? Saw a lot more buyers than a lot more sellers than buyers in the market at that moment, and then I ended up taking the short, and I ended up winning $600 on that day, right? And then on Bookmap, right? Oh, what the fuck just happened? Wall Street hit at record highs after Microsoft OpenAI deal. Oh, I didn't know that. Right. Everything is just about chasing liquidity, right? You want to be fluid with price when chasing that liquidity, right? We had liquidity to the top side here. It looks like we were accumulating, and then we had a bunch of buy icebergs step in, right? And then obviously they hit that profit target, right? This you don't really have to worry about. These are just extras. I like seeing how the price is changing and seeing if there's more aggressive buyers or sellers, right? To me, that's useful, but you don't need it, right? What you need is you need to track at what rate are we coming towards that price? Are we coming into some kind of key level? Are we rejecting New York VWAP and overnight? Those are going to be the most important things, right? If you want, I can make a Bookmap tutorial going over everything, but that is the basic strategy, right? I have a Google Doc in my bio that shows different types of entries based off different strategies that have worked for me and are pretty effective in the market. But for right now, that is the most simple strategy of just analyzing the market and then taking executions off New York or overnight VWAP, right? That's going to be your best friend, and that's the only one I recommend. So that will conclude this little overview of my strategy. Hope you liked it.